Do you believe that it is practically difficult for you to save money depending on the amount of money you are now making? However, it is a lot simpler to put money away when you have a lot of it coming in. It is not impossible to put money aside even when one has a limited salary. As a result, we will discuss today 7 effective strategies that can help individuals living on a limited budget to save money. It is a privilege for us at Lifehack Kahunas to have you join us on this exciting adventure. You may expect to learn new tips and tricks about achieving success in life from each video that we upload. Success in life is achievable and available to everybody. You just need to know how to get it. We have compiled some of the most profound ideas, thoughts, and events from around the world here. These cover a wide variety of subjects, including wealth, technology, health, and many more. We put in our best effort to ensure that the videos are entertaining, educational, and enjoyable for our viewers. Join our family now by subscribing to our channel. Click the bell icon so that you never miss a video, and you are always the first to see our new videos. Don't forget to give it a like and share too. Number 1. Lower your housing costs. Regardless of whether you choose to rent or buy a home, your monthly housing costs will be the most significant. Most financial experts agree that your monthly after-tax income should not be more than 35% of your monthly rent payment, plus other costs. This item swallows up a substantial portion of your monthly income, but it also provides the greatest possibility to save money. In other words, it lets you save more money even if your salary is lower. Renters can save money on their housing bills by avoiding a variety of waste. First and foremost, select a more affordable location. Instead of paying for a 2-bedroom apartment, consider staying in a friend or family member's spare room. However, if you don't want to move, you should look into other options for lowering your existing rent. The most effective techniques may involve bargaining a lower rent in exchange for your services, such as renovations, or agreeing to a longer lease in exchange for your landlord's desire for security. Tax guidance and quarterly bookkeeping services were swapped for a few $100s off my rent when I was a tenant. I saved big bucks over the term of my lease because of this easy exchange of products and services, reducing my expenses while maintaining a modest standard of living. Also, if you're a homeowner, your council will be slightly different. Small actions, like turning off the lights and limiting your water consumption, can have a big impact on your wallet over time, so you don't need to move to save money. However, renting out a room is the best option for offsetting your housing expenditures in the long run. The extra money you'll earn from renting out a room in your house each month can help you pay off your debts and put more money in your savings account at the end of the month. Number 2. Avoid debt. To preserve money while earning less than you'd like, you must avoid debt of any kind. In more ways than one, debt prevents you from saving. To begin with, making payments on that entails a recurring monthly obligation. Creditors will come knocking on your door every month, and if you avoid that debt, you'll have more money in your wallet at the end of the month. Debt is virtually always linked to monthly interest payments. Lines of credit normally charge between 3% and 5% interest, which means that on a $10,000 loan, you'd be forking over $25 to $40 a month. While it may seem like a modest sum, compounding it monthly can have a big impact when you add up all of your installments and the interest costs that go along with them. As a low-income earner, it's easy to see how debt might make it difficult to save. Credit card debt exacerbates this problem even further. For the year 2022, creditcards.com found that the typical interest rate on a credit card is 17% per year. In other words, getting into debt is a costly affair, and if you're carrying a credit card load of $6,338.80 per US adult, you're paying about $1,120.20 and $42.40 in interest charges to credit card firms. In order to conserve money on a low salary, you must avoid debt and its interest charges at all costs. Number 3. Limit entertainment costs. Everyone wants to have a good time, but for many people, this comes at a high price point. Going out to dine, drinking after work, seeing a movie, and other forms of amusement can quickly drain your bank account. When I was young, the one thing that made me happy was going out with my pals to the club. However, most of those nights were really pricey. It's easy for me to spend $100 or more on cocktails and a cover charge at the bar on most occasions. To avoid missing out on time with friends as I got older, I focused more on making money, but I didn't want to sacrifice quality time with them. This prompted me to come up with creative ideas for spending time with my pals without going broke. Going for walks with my buddies has been one of my favorite choices. There are also ideas like holding dinner parties at home instead of a restaurant, and viewing movies on Netflix instead of the theater that I have come up with. Basically, we all want to have a good time, but we don't want to spend a fortune doing it. Number 4. Understand your wants versus your needs. There's no denying that buying things makes us happy. However, if you have a modest salary and want to save, you must be able to distinguish between your wants and requirements. It is possible that you may like to upgrade your phone, but you probably don't have to. Even if you'd like a new shirt for this Friday, chances are you already have a slew of fantastic ones. To save money when you don't have a lot of it, you need to be extra careful and just spend on your essentials. So how do you determine what a want is and what a necessity is? To me, anything that is essential to my well-being qualifies as a necessity. Everything you need to survive can be found here in its most basic form. Even if you consider getting a Ferrari for transportation, using the bus can carry you from point A to point B just as easily. Anything you don't need is considered a want thing. Everything that extends your current possessions is included here. This is an example of a situation where an upgrade would need to be justified. For example, you want to change your phone since the camera of the new model has an additional 2 megapixels. There is a limit to how much you can spend, and you can't keep it there forever. Here are my recommendations if you'd like to treat yourself to a single luxury item. Determine how much money you want to save, such as $1,000. It's now time to buy the thing you've been eyeing after you've reached your objective. There are 2 major advantages to using this approach. When you have time to think about the thing, you'll be able to decide whether or not it's worth it to buy. When we acquire something on the spur of the moment, we're more likely to end up regretting it afterwards. To save money on a low salary, you must be able to distinguish between what you want and what you need. Number 5. Spend wisely on groceries. The typical monthly grocery bill for a household of 4 is estimated to be close to $1,000. As a result, it's one of our more expensive monthly bills. There are ways to reduce that number though, with a little forethought and the ideas I will share with you. The first step to saving money on your monthly shopping cost is to make a menu plan. Additionally, you will only be able to use this when absolutely necessary, which is great news for your health. Even if you don't think about it, we throw away a lot of food every day. Americans throw away a huge amount of food each day, research published in Science Daily showed in 2018. That, if avoided, would result in substantial savings in the food sector. In addition to reducing food waste, preparing ahead allows you to take advantage of sales and reduce your weekly grocery spend from the normal $250 to as low as $200. At the end of the month, you'll have the extra money in your wallet. In order to save money on groceries, the second step is to cut back on your meat consumption. To cut down on your food price, meat is the cheapest option, making it an obvious target. In order to save money, I'm not advocating that you go vegetarian. You can significantly reduce your food price by reducing your meat consumption or substituting it with cheaper alternatives like beans. Finally, bringing only cash to the grocery store will help you save money on your expenses. Many individuals discover themselves at the local supermarket eager and anxious to fill their shopping carts because of the seemingly infinite opportunity to spend on credit. Instead, organize your purchases ahead of time and carry only the amount of money you'll need for each purchase, so that you don't succumb to your hunger. Number 6. Practice zero-sum budgeting. The goal of zero-sum budgeting is to spend every last penny of your income. Zero-sum budgeting entails dividing your income equally among all of your budgeted expenses, and then putting any extra money you have in a separate account for savings or investment. Let's use a real-world scenario to demonstrate this approach to budgeting. After taxes, you'd be making $2,000 a month. With the zero-sum budgeting strategy, you would assign the entire $2,000 to your monthly expenses. Rent, auto payments, petrol, groceries, and entertainment are among the most common costs. You'd also have to add a financial statement for savings if you used this strategy. Once you've completed this list, you'll have to spend all $2,000 on modest products, which means you'll have to dip into your cash reserves. The technique works best for people who usually make it to the end of the month. They come to the realization that they have no savings. However, if you use the zero-sum budgeting strategy and adhere to your initial spending plan, your bank account will rise. Number 7. Automate your savings. Automating your savings is the final step in the process of assuring that you will be able to save money, despite having a modest salary. Setting up regular deductions from my paycheck through my company has been one of the most beneficial things I have ever done for my personal money. Because of these deductions, I was able to divert a portion of the money that would have gone into my checking account to my savings account instead. This meant that part of my paycheck went into my savings account. When I first set up this procedure, I decided to put away 10% of the money that was left over after taxes in a savings account. My monthly savings have more than doubled as a result of my ability to increase this percentage to roughly 20% over time. Now, I believe that there are 2 key reasons why this method of cost cutting has been so successful. First, I was able to determine with precision how much money I intended to set aside. If you use automated deductions, you can set your deduction to the amount that you have specified as monthly savings in your zero-sum budget. This allows you to configure your deduction to exactly match your monthly savings. It allows you to combine the 2 methods of saving money. Second, it freed my mind from the burden of needing to set aside money for future expenses, which enabled me to concentrate on other significant matters, such as enhancing my abilities in order to increase my income. I tell people all the time that once they have a reliable method of savings in place, the most important thing they can do to save more money is to increase their income. And because I was able to free up more brain space as a result of this, I was able to increase the amount of freelance work I did. Hence, increasing the amount of money I had in my savings account. That's all for today, guys. So which part of these saving hacks interests you the most? Let us know in the comments, and if you liked this video, please click the like button. Until next time.